Hey, what's happening, everybody? Tim from Alpha Wolf Trading coming at you with the state of the markets and some stocks to watch. Interesting couple of weeks that we've had here. Definitely seeing a little bit of strength in the markets. It's interesting because I think it was in the last 4 weeks, 5 weeks, 6 weeks, everybody and their brother was talking about the fact that we were going into a hard recession. And it seemed like everybody knew that. Everybody knew that we were going into a big time recession. And guess what? The market tends to do the opposite of when everybody's on the same page, that's really when you need to be somewhat concerned because everybody was on the same page that we were going into a big time recession. And it's all you heard on CNBC from just about everybody. And I have been saying, and I've been consistent with my group of people that uh, at Alpha Wolf that we're going to see a tremendous amount of wealth creation in the next 12 to 24 months. And the reason that I've been saying that is a few things. Supply chain issues were a big concern, and they were wreaking havoc on pricing. We have, if you listen to earnings calls, we have a lot of inventory builds, and a lot of these companies have too much inventory. So what are they going to have to do in order to get rid of that inventory? They're going to have to lower the prices, right? So that's going to take some of that inflation pressure off. We've got gas below $4. I don't know, for us in Vegas, below $4, kind of a big deal. Haven't seen that in a while, um, and that relieves some inflation pressures, right? We're going to see us. We're seeing a slowdown in housing sales. We're seeing a drop in housing prices. Uh, do we want to, see an absolute crater in housing prices? I don't think we want to see that. Um, but a nice healthy pullback, I think that's warranted, right? I think that's a good thing. But there is still that issue of supply and demand, right? There's still that uh, the issue of having homes for people that you know want to buy a home or need a place to live. So, look, can prices come down more? Sure, they can come down more. There's no doubt about it. Do they are they going to go crash like they did in 2008? I have a difficult time seeing that. Not saying that it couldn't happen. Anything could happen, but it was a once in a lifetime kind of event. I think where you saw Lehman Brothers and Bear Stearns disappear. Very different times today. I don't think we have the leverage that we had. I don't think the banks have that kind of leverage. I don't think that individuals have that kind of leverage like they did back then. And I don't think people were buying homes on stated income, right? So, very, very different times. So, I look at the charts. Am I happy about the fact that we're bouncing? Yes and no. I mean, I am kind of happy. Did I want more of a capitulation? You bet your ass I did. I wanted more of a capitulation because why? I wanted real fear in the streets. I wanted absolute panic. I wanted people selling for emotional reasons. And, maybe possibly getting the opportunity to buy some really good companies for dirt cheap. Not to say that there aren't dirt cheap. Cheap can get cheaper. And that's something you learn when you've been doing this for a very long time, right? Cheap, you think it's cheap, it can get cheaper. So, but I will tell you this: there are a lot of the stocks that I liked, a lot of stocks that I've been interviewing over the last 12, months that their charts are doing some interesting things, and they are showing some strength. They're breaking some long-term trends, and they have fundamental catalysts that are on the horizon. So, the companies that have performed, that have maintained even in this kind of environment that we've had, these guys deserve a pat on the back, right? And at some point, I do think Wall Street is going to reward them, uh, and maybe it'll be a fundamental catalyst that makes that happen. Uh, but there are some ridiculously priced good companies out there in the market, and we're going to talk about a few of them tonight. But first, before we do that, let's talk about the week ahead. We do have the Fed that is going to do the interest rate, whether that turns out to be a quarter, 50 or 75, or maybe zero. Maybe he doesn't do anything. Maybe he stands pat. Now, if he stands pat, I think you're going to see the market rip. Um, if he does 0.25, then the market's pretty much got him figured out. At least he can talk as tough as he wants to talk. He's got to talk tough. If he talks about lightening up, which I don't think he's going to do, because if he did, the market's going to rip, right? And he's trying to fight inflation. He doesn't want the market to rip. Okay, so he's going to talk tough, but if he only does a 0.25 raise, you know, you can talk as tough as you want, but it's signaling that you're nearing the end of this tightening cycle. So that would be a positive thing. I don't necessarily want to see the market rip on a 0.25. You know, I think if you see a 0.50 or a 0.75, you're going to see the market pull. And if you look at a lot of the sectors that where we're right at price resistance in a lot of these sectors. So it wouldn't be a total shock if we did see a pullback. And it actually, to me, I would rather see that than to see it continue to rip higher, right, in a very short period of time. So, but there are some definite downward trends that are being broken, and not just in indexes, but also in individual stocks. So we'll get to that in a minute. But let's take a look at these indexes. So look at bots. Bots is artificial intelligence, robotics, right? Look at where this is coming up to, right? This is a big area of potential price resistance, right? It was it's been acting as resistance. Had a couple of bounces. Now we did break this trend line right here, right? We managed to break over that trend line. Now, we could then just come back down on low volume and then retest the top of that trend line, right? Not go back below it, but just come back down, test the top of it, and then maybe continue the move higher. Look at the IBB. IBB, which was arguably one of the weakest sectors out there, is actually looking pretty constructive here, right? And it could be putting in like a reverse head and shoulders type pattern. We're at an area of price resistance. It could continue to consolidate. We're above the 50-day moving average. We've got looks like we've got a golden cross there in the IBB. IBB is looking pretty healthy. Biotech could be one to keep an eye on. I'm sure we have, I'm almost positive, as a matter of fact, that we've got some big biotech conferences that'll be happening in the next month or so that could give some juice to the IBB. IWM, you guys know that I like to pay attention to IBB because IWM has a lot of small cap, micro cap biotech names in the IWM. So if the IBB is acting weak, most likely the IWM is going to act weak. So you've got the IBB looking good, and guess what? You've got the IWM looking good as well, small cap. So, but we are at an area of potential price resistance, right? See this area right here where this congestion is? We've got potential price resistance there. Now, we did take out this trend line, and what are we getting? It looks like we're getting ready to do. It looks like we are getting ready to, let me just, looks like we're getting ready to possibly do a golden cross. We got the 50-day looking across above the 200-day moving average. So that's fairly interesting, right? And do I want to see that? Sure, you bet I want to see that, because a lot of the small and micro cap names that we are in, I'd like to see them, get some life. IYT, transportation. So again, this also looks like maybe it could be headed for a golden cross, 50-day crossing over the 200-day, still in a downward trend. Right? We have not really broken above that. We're still in a downward trend. So we'll see how that plays out over time. QQQs. Now, the only thing I will say about this is look at the size of this move. right? Very short period of time. Remember, I've said when you get these bounces, even the bear market bounces, they can be vicious. They'll rip your face off rallies, and that is really what we're seeing. The question is, is this it? Maybe we've had that big rip. Now you get a bunch of people that are trying to chase, right? FOMO, and we get another resumption to the downside. No, I don't know. I don't know the answer to that question. We're going to find out over the next couple of weeks, right? But I do think it's interesting that we're at these areas of price resistance, which could then act as, the area for this to pull back. Robo, same thing as bots. They're artificial intelligence, semiconductors, robotics, also at an area of price resistance, right? We've got SMH. Look at where it's at. It is at an area of potential price resistance, right? So all of these indexes or these sectors are at areas where it would make sense for us at the very least to pause, or just consolidate for a bit, or potentially pull back. And then how dramatic is that pullback? I do believe I'm going to go ahead and say this. I would be shocked. Well, I wouldn't be shocked because anything can happen in the markets. I would be surprised if we were to pull back and go test the recent lows. And I'm talking like in the SMH to come all the way back down here. I would be surprised by that. And same thing with the QQQs and the IWM. To come all the way back down here and test this area, I would be surprised if that happened, because to me it's starting to look like, it's this recession, if it happens, is not going to be as bad as everyone is anticipating, and maybe, just maybe, more positive news continues to develop, and maybe the worst of it is behind us. I mean, I'm not saying that is the fact, but what if, right? Then we very well could be in the beginning stages of a new bull cycle. So we'll see what happens. S&P 500, we are actually bumping up against the downward trend line, and I would say this: if the large tech mega caps, tech companies, and small caps, and micro caps and mid caps, if we get some positive action there, I would think that maybe you would want to avoid some of those safety type plays that have been really rocking in the S&P 500, right? Because any of those safety type plays, the dividend payers and all that, the appetite for those may dry up, and you could see some pretty good volume of people getting out of those so that they can get back into the big movers, right? The big growth stocks. So I'm not saying that's going to happen. I'm saying it's possible. And then if that is the case, then you see the Dow potentially see weakness and the NASDAQ see strength, right? We'll see how it plays out. XLB, which is building materials, at an area of potential price resistance, also at a downward trend line. XLE, energy, big area here that we are looking at for price resistance, right? XLF, financials, look at this. I mean, it just broke through, actually. It did just break through a little area of price resistance. Looks like it managed to close above it. But I would not say it's cleared that and it's ready to rip higher. We'll see how things play out this week. Industrials kind of has an interesting formation there, and it does look as though maybe we've got a golden cross that's happening there as well. So let's take a look at the XLP, which is consumer staples, and so that $72 area looks like a pretty big area of potential support. See what happens there, but considered to be a safety trade, right? And if people don't feel as though they need to be playing the safety trade, consumer staples could continue to head lower. Utilities also considered a safety trade. It looks like we've got what? We're below the 50-day moving average. We closed below the 50-day on both the XLP, which is actually, yeah, consumer staples. XLP and the XLU, both considered safety plays, closed below the 50-day on both of those. And actually kind of looked like we got a bear flag formation in both. XLV is healthcare. A little bit of a pullback there. Above the 50-day, and it looks like you got the 50-day above the 200-day as well. Maybe we see a little more consolidation. Or no, that's hold on a second here. XLV. Okay, so below the 50-day, I can't tell if we're below the 200 or not. No, we're not. We're still above the 200-day. You just had the golden cross on XLV, healthcare. And it's kind of at an area of price support here. I think a healthcare could be an interesting one to keep an eye on for a bullish, more of a bullish run. Consumer discretionary. That's an impressive pop. Above the 50-day, coming right to the underside of the 200-day, right at price resistance too. It's a interesting area for XLY. That's consumer discretionary, very interesting area actually. Be interesting to see what happens to this week. But look at the move that it has made in the last couple of weeks, right? These are massive moves for these indexes. So, to see them slow, take a breather, I don't think would necessarily be a bad thing. XOP, oil and exploration, looks like that one wants to do a death cross, right? 50-day below the 200-day. Be interesting to see what happens in the next couple of weeks there. Retail, which is my favorite sector in the whole world, and that's I'm being sarcastic. It's not my favorite. XRT, I have to say though, does look fairly interesting. It's looks like it's at an area of price resistance, and it looks like it actually closed above it, and it broke that little downward trend line. So XRT is actually looking kind of interesting, but it's not one of my favorite sectors. And then XTL, which is telecom, also continues to do kind of a compressed coiling pattern, right? We've got this pie formation where it's kind of just narrowing, and then at some point you figure it's going to pop one way or the other. All in all, the indexes look interesting. They look like they're coming up to some key areas, how they react, what the volume is like. It's gonna be an interesting week. It's gonna be a very, very interesting week. Earnings. We got some big names. We've got SoFi, Philips. We've got Whirlpool. So we've got some consumer staples names, right? We've got who else do we have? Canon, Ryanair, HP. We got Hewlett Packard. We've got AMD. That's a big one. We've got Snap, UPS, GM, Pfizer, Amgen, McDonald's, Caterpillar. Right, and those are those big S&P 500 names, right? That you got Phillips 66. You've got Exxon. I mean, we've got some big names here. We've got Corning. We've got Spotify, Caterpillar, Pfizer. I mean, we've got some big names. Waste Management, Eli Lilly, Ford, Google, Amazon, Apple. I mean, we got some big names that are reporting, and some of these names have had some nice moves, and Thermo Fisher is another one. Boston Scientific, Peloton. Ooh, that could be painful. Um, Allstate. Yeah, we've got a good Sony. We got some big names that are reporting. So between the earnings that are coming out and the Fed, right? Uh, this could be this. Oh, Meta's reporting as well. Uh, Honeywell, Qualcomm. Yeah, we got some big ones. Big ones. Starbucks. So ConocoPhillips. Yeah, there's a lot of big ones. So it'll be interesting to see what happens this week. And it's interesting where the S&P 500 is sitting. It's still in a downward trend below that trend line. We'll see what happens. We'll see what happens. But even if we get a pullback in the S&P 500 or the Dow names, doesn't necessarily mean that the tech names are going to roll over with them, right? Maybe that's where money flows to. We'll see. We'll see. I think AMD will be a real good one, and Snap could be interesting for some of those social media names early in the week. So we've got big earnings. We've got a market that or sectors that look fairly strong. We've got the Fed on Wednesday. We'll see what they do in terms of rate increases, or maybe he doesn't do anything at all. And then what else do we have? Let's take a look at the economic calendar here. So we've got Monday the 30th, nothing there. Then on Tuesday we've got employment cost index. We've got the S&P Case-Shiller home price index. We've got FHFA home price index. We've got Chicago business barometer. We've got consumer confidence index and rental vacancy rate. Interesting. And then on Wednesday, we've got ADP employment report. We've got S&P manufacturing PMI. We have ISM manufacturing index. We've got job openings. We've got, what is that? I can't read that because my eyes are terrible. We've got construction spending. We've got the federal funds rate. And then we've got federal funds projection. And we've got the Fed Chair Jerome Powell and a news conference. So, that could be an interesting day. And then what else do we have? We've got vehicle sales. We've got on Thursday initial jobless claims. We've got continuing jobless claims. Then we have unit labor costs, first estimate. We've got factory orders and costs or core capital goods orders revision. And then we've got non-farm payrolls on Friday. The unemployment rate, we've got average hourly earnings, we've got labor force participation, S&P U.S. Services PMI, and ISM Services Index. So you can see that we've got some pretty big stuff coming up. This could make this a really volatile week. It could make it an exciting week for the Bulls. It could make it an exciting week for the Bears. We don't know. We'll have to see how it plays out. Now, what I do want to do quickly is talk about some specific names. LVO. What I really want to do is I want to show you, and these are some of the stocks that I've been interviewing. These are some of the stocks that, I've kind of been pounding the table on over the last 12 months. And, these are long-term plays for me. And, I think they have gotten to some ridiculous levels in terms of pricing. I want to change this out here real quick. Put a different chart up there. But we're going to see. I want to show you some of the stocks and how they almost all look very similar in the setups that they currently have. But before I do that, let's take a look at the T2107 and the T2108. So T2107 is an indicator. This is the amount of stocks that are above their 200-day moving average. When you get 70 or above, that is an indication that things are pretty frothy and you could see a near-term pullback. We're actually sitting at about 60 right now. So it's not super frothy, but we are getting up into the 70 area. T2107, and then I would assume that the T2108, which is the amount of stocks that are over the 40 PMA, that is sitting at 70, 76. Now, just because it's sitting at 70, 76 does not mean that you will see an immediate pullback. You can see here it was at 70 and it stayed in that range, 65 to 70 for, what was that, a full month, it looks like. But you can see also how many times when it does get up into that area, you see a pullback, right? Pullback. Wouldn't be a shocker if we were to see a pullback, right? So that would be the one thing that would give me a little pause when it comes to the small caps. Is that we are a little bit in the frothy area for the short term. Right, so we could see a little bit of a pullback. We'll see what happens. Let's take a look at so LVO. What's LVO got going on? Well, LVO has gotten beaten badly, right? And it had damn near a complete double bottom test, and it looks like it's found its footing, and it is above its 50-day moving average, and it is putting in a little bull flag pattern right below the 200-day moving average. It has taken out this longer term, that's 2 years, essentially, downward trend. Let's see what happens, but it looks to me like it has broken that long-term downward trend, and potentially we start to see the stair stepping up, right? We know that they are spinning out one of the podcasting division. I think he mentioned, Rob has mentioned that he's looking at potentially spinning out Slacker, which is, the subscription service. He's looking at potentially doing that. And, he's kind of forcing the market to value the pieces of the company because they are not giving him fair value for the whole of the company. So interesting dynamics happening there. I've said it a million times. Rob is a fighter. He this is not his first rodeo, and I believe that this is one of those stocks that is severely undervalued. And I do think that this at the very least maybe goes back up and tests this 150 area. That seems to be an area where it's having a little bit of the difficult time getting through. But if we can get above, up to that 150, consolidate a little bit, and then take it out, I think then 150 becomes the floor. I think it's got a very attractive entry point right here. I just look at risk reward. I'm not telling anybody to buy the stock. All I'm saying is it has a very interesting look, both technically and it has some compelling things going on fundamentally. SKYX, this is one that some probably have never heard of. This is another one that this actually IPO'd at $14 a share. It had traded sideways for 3 months or so between $10.50 and $13.50. It broke below $10.50, closed below $10.50, and if you're a technical guy, what does that mean? Well, it means you have no support to the left, nothing. So where does this go? Where does it find a bottom? It finds a bottom the hard way, right? Through time. And the stock, obviously big loss in market cap, found a base around 2, popped up to 7 on some big volume, huge volume, and then basically, kind of went sideways, lost 350 as a support area, broke down, went and tested 2 again, actually cracked below 2 And it was very strategic the way it was done because it was right before CES. And everybody and their brother knew that 2 was a support area, right? So if you're going to go do a little stop shopping, where would you find stops? Probably not too far below 2. 175, right? 180. You put your stop in because 2 was the prior area of support. Boom, you take that out and you trigger a whole bunch of stops and you can pick up some cheap shares. And how would that trade have worked out? Well, 150, it actually got down to what? 137, right? 137. And in what? A couple of weeks, it is now at 330. It's a pretty good return. A couple of weeks. What changed? What happened? You had CES and you had the American Light Manufacturers Association, the largest show for them in Dallas. So you had the CES event in Las Vegas. You had the lighting manufacturers event in Dallas. 2 very, very big, high-profile events. CES, company walks away with 5 awards, first time being at CES. Unbelievable representation. Even if you didn't make it to their booth, you did see SkyX and the symbol just going to the convention center because there was placement throughout the CES floor that was just phenomenal. So building a brand has a product that is going to revolutionize, I think, maybe not 1 but 2 industries. In my view, very cheap for what they are bringing to market. If you don't know the story, I have done an interview with the founder on the YouTube channel. I have done a product review after CES. I sat at CES for 3 days, actually 5 days. Spent time with that team and the visionary behind the product. I watched customer reactions. I watched competitor reactions. I watched a lot of different things. I talked to a lot of different people, and I can say that it's very rare that you have something this blatantly obvious staring you in the face. But this is a big one. They are going to be here in town at the Builder Show in Las Vegas. They were just here at CES. Now they're back for the Builders Show. Do they need to be there? I don't think they do. But I think what they're doing is they are keeping, they are staying relevant, and they are keeping that getting the message out to everybody about their product. It's a brand new product, and it is going to rock the construction industry. It's going to benefit the lighting manufacturing industry. And I think it's going to benefit party planners and real estate flippers and all kinds of things. So if you don't know the product, go to the YouTube channel, watch my interview with the CEO. And if you don't grasp it there's also a product demo that I just did after CES. You can check that out for SKYX. But this is going to be a big one, folks. I'm telling you. At least that's my belief. Anything can happen, but this is another one probably be good to keep an eye on. If you look at it technically, what has it done? It has broken that long-term trend line, and it is now in a bull flag pattern right below the 200-day, very similar to what? LVO. Very similar look. I want to show you LPTH. Now, these are all companies, by the way, that I have recently interviewed on the YouTube channel. LPTH. Now, what do we have? We have the break of a long-term trend line. We have a stock that is at an area of potential resistance. We have a bull flag pattern above the 200-day moving average. We have look at the slope of the 50-day. Looks like we're going to potentially get a, what would you call that? I would call that a golden cross. Okay? I think this is one you keep an eye on because they have some incredible. They just did an offering, by the way, and it was priced well. Why is that? Well, because they have some really fascinating things going on there. And I think that the price on this, Sam has done a remarkable job. What he has done through a pandemic, through uh, fraud in his China factories, through a pandemic. I mean, this guy, talk about taking over the position of a company at the precisely the wrong time, and where everything that could go wrong did go wrong. Not that the management team hadn't experienced those things before, they just never experienced them all at the same time. So kudos to Sam. Unbelievable job there and his team, not just Sam, but another stock that I think you keep an eye on. How about Red Cat, RCAT? They don't have anything really going on that's all that important, except for maybe a big Army contract that I don't know. I think it's possibly around somewhere around a $500 million. We don't really know, but plenty of cash, no debt, and really, literally, one of two bidders left for that Army contract that I just spoke of. And I just interviewed this CEO, Jeff, and he basically laid out the fact that with conviction, they have the best bird in the sky for thermal image at night. What does this stock look like? Well, looks like it broke this, long-term downtrend. Talking about a couple of years maybe here. It has broken that. It is over the 50-day moving, or is it over the 50-day? Hold on a second. That's the 200-day. Why do I have so many damn, hold on. Better. Over the 50-day moving average, right? Still below the 200-day, right at an area of potential price resistance. But it has broken that long-term downtrend. So, it would not take, not a big float here. Matter of fact, same thing with LPTH. Not a big float. That one has actually a pretty tiny float. Could really get ripping. Red Cat, same thing. I mean, you're not talking about an extreme amount of shares here. They don't have a bloated share count. They got cash. They have no debt. They just doubled the size of their manufacturing facility. Most likely going to become the largest manufacturer of U.S.-made drones in the United States. That's pretty cool. Something that I think you want to keep a close eye on. And if you are starting to pick up on this, there's a lot of these stocks that look very, very similar. AYRO, what are they? AYRO, very good cash position. Tom has done, I got to tell you, an incredible job. I met him, a year and 2 months ago, and I thought, boy, this guy has got his work cut out for him because he was taking over for the former CEO, and it just did not look like a good story to me, and I thought he was going to have a hell of a time turning it around. Here we are a year and 2 months later, and I met with Tom, and he's got a very clear vision. He has a very clear, focused product. He knows how he's going to market, and it's a niche industry, but it's massive. It's got a massive TAM, and he's got a very innovative product. That it's an electric vehicle, low speed vehicle, but it's got the same chassis, but it can be built for food delivery, cold, hot. It can be a landscape. It could be it can be used in so many different facilities, stadiums, universities, airports. It just goes on and on and on and on. And not only is it's an EV vehicle, it's also what it's built with is environmentally friendly. Very interesting. Tom's an engineer, and let me tell you a little this, just something, a little something about Tom. He's a turnaround guy. He's done this I don't know how many times, and if you go back and take a look at the companies that he's been with prior, I think you'd be pretty impressed with what he has done at each of the places that he has been before, where he came in as the turnaround guy. So take that in mind. 53 million in cash, no debt. I think interesting one. Might want to take a look at that one too. But long-term trend looks like shit. Chart looks like shit. Whole story could look like shit to anybody that doesn't know what's going on at Arrow and doesn't know that Tom came in as the turnaround guy. But have a call over there, talk to Tom. I think you would be pleasantly surprised. Precision Optics, POCI. Right, Joe over there. Stock trades very thin. Very in the optics space, by the way. Optics space, just like LightPath, but different. Different segment of the market, and Joe is a very, very smart guy. They just uplisted to the NASDAQ. This one's got a very, very tiny float. Look at that. I very amount of shares outstanding. I think 7.8 million shares. Potentially, they just got a new contract with the military. They've got some contracts that were put on hold because of COVID for robotics for the medical field that are now coming back online. And they've got some new potential opportunities with both medical and also military, right? Optics are something that is not going to go away. It's only getting more important. Think about autonomous vehicles. Think about drones. Think about, all these different things that are going to need optics, robots, right? Robotics. All of that stuff needs optics, needs lenses. And these are two, POCI and LPTH, they're two players. And they're two players. One has, an innovative product to compete with China and germanium. If you know what I'm talking about, then you are way ahead of the game. And if you don't, that's okay. Check it out. I mean, these are incredible stories. They've all been laid out for the members over at Alpha Wolf Trading. They know why I love these companies, but if you don't, then check it out, because there are some amazing stories out there. There are some amazing companies out there that are doing amazing things and have not been rewarded. POCI would be one of those. Duat, I should say. Duat. This is another turnaround story, turnaround specialist guy that has come in. He's done 3 of these. Chuck Ferry, incredible guy. I mean, I speak with him, and guess what? I can feel, the first time I met him, I could feel his leadership. He's just got that kind of intensity, that kind of personality. To me, may not have that with everybody, but I could tell he was a leader. And he came in to turn this company around. He had several opportunities to go to other companies. He chose this one. Why? Why did he choose this one? Because of what he saw as the potential for this company. And he is absolutely turning this company around. Is it taking longer? Yeah. You know what? Happened to join into this thing right around COVID time. So yeah, it is taking a little bit longer, but are they on the right path? Do they have the right trajectory? I would suggest they do. This is another one that has a very, very small float, very small amount of shares outstanding, revolutionary product, software as a service, and they just, have actually determined or come out with a product that is going to make their potential customer count triple, quadruple. I mean, it's a fascinating story. This is a game-changing product that they have the proprietary rights on. This is one that you want to keep an eye on. MAPPF. It's a penny stock. I know. It's a penny stock. It's on the OTC. Terrible. Here's the deal. Revolutionary product. Brilliant visionary that came out with a software as a service that identifies, records, captures, uploads to the cloud our underground utility infrastructure within 1 centimeter. Okay? Why is that a big deal? Because we have 500,000 utility strikes every year. We have people that die from hitting a gas line, or people that get sick from sewer lines being hit, and that goes into our, water supply and our food supply. We have 35 million miles worth of underground utilities. We have 2.6 million miles of paved road. Think about that for a second. 35 million miles. That's a big number. We've got water that's been underground for 60 to 100 years. We don't even know what the pipes are made out of that the water's flowing through. That's how long they've been in the ground. We don't know where they are because they're on paper plans. We didn't have computers and digital maps back then. Good luck finding the paper plans, right? We're going to do a $1 trillion infrastructure bill that was passed, and we've got 35 million miles worth of fiber and cable and electric and gas and oil, and we've got all this stuff, and we don't know where it is precisely. We've got a gentleman that makes a documentary called Digging Dangers, where literally going out to these utility strikes, the 500,000 I mentioned, and filming, these houses or buildings that have been blown to smithereens. They look like a war zone. Floods and fires and explosions. And how long will we continue to allow these things to happen? Because the construction industry is slow to adopt technology, right? And we have solutions. We have a solution. And it's this stock right here. They work with Trimble. They're integrated into Trimble, a $17 billion company that opened up their equipment and said, here, penny stock guy, put your software on our hardware. Why did they do that? Because his software is pretty gosh darn special. And at some point, the insurance companies or the insurance industries or the companies that are bonding jobs are going to say, hey, if we could reduce our utility strikes from 147 on one job, same size job, and reduce that down to 3, might want to make these companies use that software. Like the state of Colorado, CDOT made it law that if you're going to work on right-of-way in Colorado, you will use their software. Why wouldn't we do that across the entire country and limit the 500,000 utility strikes that we have every year that cost the country somewhere between $30 and $60 billion a year? Is that a big problem? It's the same problem globally, and that solution works globally. 15 cents makes a lot of sense. Another one to take a hard look at. I'm not telling you to buy these things, but I am telling you that there are companies out there that can make a tremendous impact for some huge problems. There are solutions. What could the country do with an additional $31 billion a year or $60 billion a year? Because they don't know actually the true cost of what these utility strikes cost us. So what could the country do with that? I don't know. Is it important? Safety, people not dying from getting blown to smithereens from hitting a high pressure gas line. I would think that that is important. SkyX is also a safety issue, right? If you can reduce the time of installation on something from 30 minutes to 30 seconds, and you're not touching any raw wires that could be hot, it's a safety issue. And safety trumps everything, right? In my view, safety trumps everything. These are all legitimate. These are not pump and dump. These are real companies with real products making real differences. And all they need is the support of investors in Wall Street. But Wall Street is broken because they don't really care about these companies that have game-changing stuff. They don't. All they care about is doing financing deals. That's the truth. Okay? They're not going to give coverage to a stock like this because why? They're not big enough. They can't even touch them, right? Funds can't touch them. So if the funds can't touch them, why would they talk about them? That's the reality of it. So, VMAR. I mean, I could keep going. There's a whole bunch of companies that I interviewed this year, and I don't interview anybody unless I think they're ultimately going to make their shareholders money. And we could talk about VMAR. We could talk about WYY. We could talk about Beam Global, Desmond Wheatley, stud, right? We could talk about Audia, Jeff Thraman. I mean, these people, I'll tell you what, the YouTube channel, we talk about the companies, but if you listen to these smart CEOs, these guys that have been around the block, these inventors, these entrepreneurs, there is so much that you can learn from the people on my channel. I don't just interview them because of their stock. I interview them because of their experience. I want to know their failures. I want to know their successes. I want to know why I should be in the camp with these guys because I trust them. Because Rob from LVO has been around the block. This isn't his first rodeo, right? These are people that I've gotten to know, that I trust. And that's really what it comes down to. Some people, kind of give me a hard time that I wasn't rough enough on the CEOs. I'm not here to bust people's balls. I'm here to learn about their company, to learn about what drives them, and to understand the vision that they have. Do they have the strategy to get there? And, is their product going to solve a need or is it a want? Right? There's a whole bunch of things that go into determining whether or not a company is going to be good in the long run. VMAR, outboard motors, set the world record, 109 miles an hour with a boat, electric boat. You couldn't even hear the thing. It zips by. Amazing technology, right? Better for the world, better for the planet, better for our waterways. Have they gotten the recognition that they deserve? No, I don't believe they have. Another one to take a look at, VMAR, right? Just getting ready to it just closed above the 50-day moving average. I think it's another one that's got a very small amount of shares outstanding that could absolutely rip. They've only partnered with who's the car company? McLaren. They've only partnered with McLaren for the motors, boat motors, the outboard motors. Massive company, incredible technology, set the speed record. I don't think there's anything else on the market that looks even remotely close to it. And they're, $4.51. I think it's ridiculous. I could go on and on and on. There are a whole bunch of companies that I love. Funware, another one. Randall, Crowder, stud. Very articulate, clear vision, big, bold idea. Is it going to happen? I don't know for sure, but that stock has already paid me handsomely once, and even if the shares I have go to zero, I've still made a very good profit. So on that company, and I'm not giving up on Randall. I mean, he's another fighter. So there are more and more. There's a couple of new companies I just met last week that I'm going to be interviewing soon, And I think they are tremendous opportunities, right? There is, no matter how bad their things are out there in the world, there are stocks, there are companies that are doing good things that at some point will be recognized. And it always takes longer. It always takes longer than I think it's going to take. And this isn't my first time of finding these types of companies. It just takes a long time for them sometimes to get discovered, and then for people to really gravitate and jump on, like Chiron, right? Chiron, which is life sciences, cannabis, Colombia. I mean, got insurance companies to pay for cannabis, medicinal cannabis, instead of oxycodone, right? And really done. He's done some. Alvaro has done some phenomenal things. These people, their stories are inspiring to me. It's more than just a stock. It's about supporting a company that is doing good things, right? Is on the right side of things and could change our world for the better. And I think that is something that if more people thought about, instead of going and buying $1,000 pair of Nikes that you don't need, throw a few bucks at a stock that you believe in, the cause that they believe in, what they're trying to do, right? Throw a few bucks at it, support them, and then, if you can buy their product, buy their product. If you can suggest their product to people you know, suggest their product to people you know. Help these companies out, because Wall Street's not doing shit to help them, right? Going public years ago meant going public was the opportunity for Wall Street to introduce these companies to the public, cover them, right? Write up articles about them. Nobody does that unless you do a financing deal. That's the bottom line, right? So how do they get discovered? They don't. They need you. They need the public to understand their mission, understand their vision, and to support them and spread the word, right? So I don't know. I don't know how I got off on that tangent, but look, I wrote up a thing this at the beginning of the year. How about we make this the year of addressing our needs and not our wants? Think about what this world would look like if we all stopped, worrying about our wants and looked at the needs that we have and addressing those needs, right? Things like we're going to go to an all-electric society, and what happens when we do that? When we go to an all-electric, vehicle society, where China owns 90% of the global supply of materials for batteries. Does that scare anybody? I mean, it should. What about technology? What about artificial intelligence? And you're seeing a lot of chat GPT, right? Jobs going to be threatened. I heard the other day that the FAA wants to reduce from 2 pilots mandatory in the cockpit to 1. The second one being artificial intelligence, right? Autopilot. But the ultimate goal is to have no pilot. Think about that for a minute, right? No pilot. So autonomous airplanes, you don't need pilots anymore. Literally, you don't need them. What happens when we have autonomous vehicles? Where literally every Uber driver, every Lyft driver, every cab driver, limo driver, truck driver doesn't have a job because we have autonomous vehicles. Does anybody think that those aren't coming? Because you hear about them all the time, right? What happens when they do come? Where do all those people go get jobs? McDonald's just opened up. California, brilliant. They're going to do some kind of fast food, raise the minimum wage to $22 an hour, whatever. In November, that comes up for a vote. They're doing this. California is doing as much as they possibly can to drive people out of that state. $22 an hour to minimum wage. McDonald's. McDonald's just opened their first autonomous restaurant in Houston, right? Robots can do, there is a robot for every single repetitive motion job, manual labor job that exists. What hasn't been is the cost. If you do a cost benefit analysis, maybe the tech's too expensive, this, and that. Keep raising the minimum wage. See what happens. You're just going to make it so that humans don't have a manual labor repetitive motion job anymore. They will cease to exist because they will be done by robots. And I'm not trying to be doom and gloom. It's just reality. If you look at where we're going, that is what's coming. And what are we doing to prepare ourselves for that for tomorrow? Nothing. Not a damn thing that I can see the politicians are doing. I don't see us doing anything to prepare ourselves for an economy where we have no or absolute jobs that are not just gone. I mean, they're literally gone, because you're not needed anymore. The job doesn't exist anymore because it's done by a robot. That is a scary, scary thought. If you start to really sit down and think about all of the jobs that could be replaced by robots, then what do all of those people do for work? Are they homeless? Did they become a bigger part of our homeless problem, our hunger problem? I mean, these are real issues, and there are companies out there that are coming up with ways to save the country billions of dollars that could be used to maybe start addressing problems like this one that's coming. And the problems with humans is that we don't like to address any issues until they become threats, right? And when they become a threat, then that's when we really pull together, man. We really bond and we go after these things. How about if we just went after these things now, before they became huge threats, right? Why don't we recognize the things that are on the horizon and start preparing for them? I think that the world would look so much better at the end of the year if we were focusing on our needs, healthcare, fixing that, right? Hunger, homelessness, lots and lots of different things. Our water supply, lots of things that could make a huge difference in the world, not just for us, but for the world, for everybody. So I'm going to jump off the soapbox here because I really didn't mean to get as deep as I just got. But I hope you understand what it is that I'm looking for in companies. I'm looking for companies that make a difference. Yes, do I want to make a profit? Absolutely. Do I want to invest in a team that is passionate about what they're doing? You bet I do. Do I want to see that there's a need for these things? You bet I do. I mean, those are the things that those are the intangibles that make the investments even more attractive, right? The passion, perimeter medical imaging, another one. I could go on and on. There's some phenomenal companies out there that a lot of you and many of you, none of you know about, because you'll never see them on CNBC. You're never going to see them on Bloomberg. You won't see them there. Not until they become one of those big players, right? But then you've missed the entire move. Identifying them early, tough. It is tough. Some of them never make it, right? Because they never get the support that they need. So that really is my goal, is to find those hidden gems and get them the support that they need, right? Get them the customers to appreciate them and back them. Consumer retail has more power than you give yourselves credit for. Retail is who makes or breaks a company. The customer is always who makes or breaks a company, right? Starbucks became Starbucks because of the customers were willing to go pay $5 for a cup of coffee. Walmart became Walmart because people were willing to go to the big box store to save money. It's all driven by the consumer. And if the consumer started looking at things differently and started investing in these companies along with using them, it would be a real different world, man. Anyway, have a fantastic night, everybody. I haven't done one of these free for, I usually just do them for the members. I thought I'd just do one for everybody. Hopefully I don't piss anybody off or get anybody all worked up. If I offended you in any way, shape, or form, I apologize. I didn't mean to. I'm not threatening you with the robots or anything like that. I'm just saying that could happen. It could be a scenario. All right? And that's it. Enjoy the rest of your evening. Take a look at some of those names I told you about. Keep an eye on them. At the very least, keep an eye on them, right? I mean, what's the risk reward in those? I don't know. Take a look at it. Figure it out. But they're pretty compelling. All right. Enjoy your week, and I'll see you again soon.